crypto markets refuse to break out as correlations to stocks comes back. On-chain data suggests that the bear market isn't over yet. Ethereum options flows explode ahead of the merge, and implied vol spreads look stretched as Bitcoin dominance remains low. All this and more in this week's Crypto Insight. Okay, crypto this week, Bitcoin. So pulled back, had a little test of 24K again, which is the top end of this range, this kind of ascending channel. It got a little bit above that, like 24 and a half, post FOMC, in line with risk assets rallying. But again, over the weekend, it kind of fizzled out and failed, right? Which we've seen that area on Bitcoin, really seems to be quite a formidable resistance at the moment. Okay, and we're back to kind of the middle of this channel. Just below 23K. Now, for me, the technical picture hasn't really changed. I still believe this is a fourth wave in progress. I don't have any reason to believe it's complete yet. I think a complete fourth wave requires a bit of a stingy move up, maybe towards 28K. And then we can say, okay, that's done. And we can resume our move lower, right? That may not happen. So I'm going to let the market kind of guide me as to what's going on there. If, like I say, if we do break through this channel at 24 and a half, 25K, I think we are going to get that last C wave higher within the fourth wave correction, which could stretch as far as 28, maybe even 30K, who knows? And then I'd seriously expect the down leg to resume. So I'd be looking at potentially setting up bearish trades on the back of that, hedge out any of my Bitcoin holdings, things like that. If we break down below sort of 18K, that's when I'd be, more confident that the fourth wave's done, the leg lower has resumed, and then that opens up a lot more downside, right? That opens up downside for this ultimate fifth wave target was, anywhere between 12K and 15K is kind of what I'm looking at. It could go lower, but that's given how beaten up the crypto market already is. I would have thought that's already a reasonable ways down to go if we get back to 12K. Yeah. So if equities do head lower and 3,000 is a realistic prospect on the S&P, then don't expect Bitcoin to get far from that sort of area, right? That 12K area. I'd be stunned if that didn't happen, basically, right? And we are already starting to see that correlation between crypto and equities come back a bit, basically, over the last week. Yeah. And then we've also got this kind of Mt. Gox selling pressure still ongoing throughout August, which is going to put a bit of a cap on market on the Bitcoin price, at least, right? It might not put a cap on other stuff, but Bitcoin probably is going to trade heavy on the back of that. If we then flip over to Ethereum, yeah, trading in line, tried a little push up to 1790, failed. We said 1800 was that next hurdle that it needed to break. So it got pretty close to there, failed, but it kind of needs to hold 1400. That seems to be the support that it's carved out around that area. So if it can hold above 1400 over the next week or two, no reason why it can't have another push higher. Like I said, ultimate target areas, if in a blue sky scenario, if the merge went well and it had a re-rating and loads of money flew into it, where could it get to? The kind of targets we were talking about were maybe that 24,000-2,500 zone. If Bitcoin got to that 28K area, basically, right? That might be possible. If we look at the spread between the two, doing pretty well, right? It has corrected, but chopping its way higher. That blue sky scenario we've talked about is still close to a 30% outperformance potential on ETH if we were to get to the top resistance area up here, right? So that's what we're playing for. If for people who are bullish Ethereum on the merge catalyst that are looking for outperformance, that's the context, right? That's what we're looking for. We're looking at a potential 30% outperformance from these sort of levels, basically, right? It's probably about as good as you're going to get, right? If you get that, I think you take your money and run, right? And then in terms of What else we're seeing in alts? Not a lot really. There's still high beta, right? So if we bring up kind of this chart here, you can see on the week, going back to the 25th, you know, when we rally, the alts rally more. When we sell off, they tend to sell off more, right? But on the week, they're kind of moving pretty much in line with Solana's up a little bit better at 5%, Bitcoin and Ethereum at 4%. So it's all a bit, it's mixed, it's kind of in line, really. So not a lot to say on the alts, really. I do think, you know, Bitcoin dominance is still hanging out near the low end of the range at 42.5%. As I said, I think there'll be selling pressure on Bitcoin. If Ethereum does get its positive catalyst and does need another leg higher, alts will probably get dragged up with it, especially the other layer ones. So I'd be quite bullish on the likes of Solana. On that point, I have moved a bit of money over to Deribit on Solana. So started to trade options on there. Liquidity is quite good. So, you know, dabbling and playing around there. Bid offers aren't that wide. You know, it's obviously the best venue for crypto options, right? So if you can get over to Deribit, that's where you should really play, right? If you can't, because you're due to your jurisdiction, then obviously play in the other places that you can. But if you can get over to Deribit, there really isn't a substitute for that liquidity right now. Yep. And that's kind of it from me. I'll hand over to Aaron on the on-chain, and then I'll come back.
This is on-chain for this week. So for the on-chain this week, Glassnode actually had two sections of their analysis, one looking at Bitcoin and the other looking at Ethereum. So we're going to go ahead and dive into both of those. The basic theme for the analysis this week was trying to determine, are we looking at a bear market rally or a bullish impulse? And they basically did this by looking at on-chain dynamics and supply dynamics to determine whether there's been enough new demand or if there's just not enough follow through. And that is why we might be looking at more of a bear market rally than a new bullish impulse. So starting out here on the top left, we're looking at the number of the active addresses for Bitcoin. This generally shows bullish impulses as elevated levels of on-chain activity and new users enter the network. You could see here this bullish kind of impulse on the way up. And then that's countered with the bearish impulse where you have less on-chain activity and you have users leaving the network. So basically the big takeaways from this chart here in the top left is that you could see, even though we didn't have that all-time high until late October, November of 2021, you can see that the number of addresses that came along with it really did not have good follow through. It peaked up and then immediately petered out, which took us into this clearly defined downtrend that we've been in ever since. And so we would really need to see an uptick in on-chain activity to really make us feel like we're moving on a bullish impulse. And you could even possibly connect the top here from May down through to where we're currently at to get a longer downtrend. And if we were able to break that longer downtrend, Glassnode kind of signals that we'd be getting to that 950,000 area, which then they might feel a little bit more comfortable that we're signaling an uptick in on-chain activity, which could potentially suggest market strength and demand recovery. Moving on to the chart on the top right, we're looking at the total transaction fees. Generally, when you have a bull market in Bitcoin, you see elevated transaction fees, but similar to these active addresses, you could see that we're pretty much in a pretty strong regime of demand destruction. So you had your bullish demand here, kind of highlighted by the green higher highs, same thing, and then this steep drop off that we've recently seen, taking us down to lows that have pretty much almost never been seen in Bitcoin history, where we're at 13.4 Bitcoin per day being paid in transaction fees. Now, while this is extremely low, Glassnode does point out that it's worth keeping an eye on, as a break above 35 might signal an uptick in on-chain activity, and that usually the recovery of the recovery of fees is one of the first signs of a demand recovery. Moving on here to the bottom left, we're looking at the mean block size for Bitcoin. And so this is basically a way to look at the demand for on-chain space by looking at the network congestion and the size of the blocks, whether they're full. In times of high activity, you have miners stuffing the blocks with as much transaction as possible to earn their maximum revenue, versus right now where we're in a more low network congestion and partially filled blocks. And the significance here is that you can see we're divided between red and blue. That's basically pre-June 2021. most of the Bitcoin network hadn't adopted SegWit yet. Real simply, SegWit was just an improvement protocol that was passed for Bitcoin, where it was a way to put more transactions, create more space in the blocks. So that's kind of divided right here. On the left side, you have without SegWit. On the right side, you have with SegWit. So even though right now we have more capacity in the blocks, we can put more transactions in there. You could see that the top of the range we're in really doesn't even break the bottom of the past range when we had that big May sell-off. So basically just pointing out that there's not a ton of demand for on-chain block space and activity right now. And then lastly, moving to the bottom right, moving away from the on-chain and more into the supply dynamics, we're back looking at the spend output profit ratio, or SOPR, basically just looking at the realized value of the coins divided by the value at the creation of the spent output. If you're not familiar with how Bitcoin transactions work, you can look into this, but basically when you obtain a coin, at the moment you obtain that coin, an input and an output is created. So, but for layman's terms, you're looking at price sold divided by price paid to gauge market profitability. So anytime you're above 1 on the SOPR, profits are being realized and there's sufficient demand flow. Anytime you're below 1 on the SOPR, aggregate losses are being realized. And so when you're in a regime where you're above 1, you usually get a bullish support. When you break through 1, you test it, and then you continue your move back up. On the flip side, when you're in a regime below 1, you get that bearish resistance. When you get through 1, you try to break back above it, you hit it, and you come back down. And so right now, an ideal scenario would be, as we're approaching 1 on SOPR, we would want to see Bitcoin break through 1, retest, and then continue its move up in order to feel comfortable that the demand is coming back and we're in a bullish impulse rather than a bear market rally. Moving on to Ethereum, we were looking at some very similar charts and some similar kind of statistics and the overall behavior going on in the network. So in the top left, we're looking at the number of transactions. You could see, despite the really powerful price action that we've seen lately, that we've kind of all been tracking, that we're in a pretty significant downtrend still going on in terms of the number of transactions. But you can see the recent activity here has taken us above that downtrend. So we would want to see that continue in order to feel that this price action has been constructive. Glassnode points out that a move above 1.25 million in transactions might be enough of an uptick in on-chain activity to suggest market strength and demand recovery, not counting this sort of big spike that we saw here, which Glassnode points out it was just a consolidation of wallets. So the transactions were just going back and forth. So really it's that we're still down here. So we would want to see a break up in the number of transactions. Moving here to the top right, we're looking at the median transaction gas price, which is priced in GUI. GUI is just the denomination of Ethereum. I believe it's 8 zeros after the decimal point, then a 1, similar to a SAT or a Satoshi. It's just a way to a smaller denomination of Ethereum. And so you really want to look at gas price and GUI in order to track on-chain demand for Ethereum rather than block space like you do in Bitcoin, because in Ethereum, there's so many transactions going on. The block space is constantly filled 99%. So you really need to look at the gas prices to determine what the demand is for blockchain space. And so what you could see is it's extremely low. GUI is down at 17.5, marking the lowest network congestion and gas price since May 2020. And this multi-year low is basically just, again, signaling that there's not a ton of new demand going on in these networks. But even at this such a low spot, Glassnode does say that a break above 30 in the GUI might be enough of an uptick in on-chain activity to suggest market strength and demand recovery. Moving on to the bottom left, we're looking at the burn supply versus issuance. As a little reminder, if you're not as familiar, I believe it was end of last year, Ethereum implemented EIP 1559. EIP is Ethereum improvement proposal, where basically it just changed the way the network works, where whenever there's a transaction, a percentage of the Ethereum that is in that transaction is going to be burnt and removed from supply forever. And so right now, you're really only at 11% of total issuance being burnt off, and you've only had 3 spikes into deflationary since EIP 1559 was implemented. And if you follow Ethereum closely or really at all, you'll know that this was a big thing that Ethereum proponents were really leaning on that it's going to become a deflationary asset. It's going to change the value of each coin, but it really has not worked out that way. And right now we're at really all-time lows in the amount of Ethereum being burned, which is telling us that a large supply, a large volume of Ethereum is actually making it into circulation, especially compared to the entire history of when EIP 1559 was implemented. And again, just another signal that there's really weak demand on chain, and we might not be seeing that follow through needed to kind of give us that bullish impulse. And so lastly, again, we're looking at the SOPR, this time for Ethereum. Now you are seeing that Ethereum has had a little more luck with the SOPR breaking through one, and then actually did have a retest, and now we're back up above that. So it is looking a little more promising, but it is worth knowing that you could see in Ethereum's history, it's pretty common for Ethereum to break through that one threshold and then just come right back down. It's done it a few times. So we really want to keep an eye on this to see if we're going to stay above that one on SOPR and start building that bullish impulse that could lead us up rather than fading away as a bear market rally. And that is on-chain for this week.
So what is the verdict then? Is it a bear market rally or a bullish impulse?
I would say, to me, it's pretty convincing of a bear market rally, but to each is their own.
Yeah, that's kind of what my read from what you're saying as well. So yeah. Okay. But that's not to say it can't squeeze a bit more, right? So that's the thing. But yeah, you would use squeezes to get hedged if you're not already, I guess. Yeah.
It seems like we have hodlers buying and selling to each other right now. We haven't quite been able to pull in the new demand quite yet, but it does look like we're moving constructively in the right direction. Okay.
All right, let's go over to vol. So bring up realized vol here. We can see that, Bitcoin realized vol has been quite stable, around 65, kind of throughout last week. It drifted a little bit lower, but then been pretty stable at 65. That's the pink line here. Implied did get smacked into the weekend, as they always do with the DOVs. And they found a bit of a bid, right? So a few gamma buyers coming in, hunting some value, thinking like gamma in the 70s isn't bad, given the choppiness in markets and potential for movement. And the fact that Bitcoin was threatening to break 24, it could have done a quick 2,000-3,000 points to 28. The gamma would work in that scenario, basically. So that kind of brought in a bit of demand. If you look at Ethereum, that's been drifting. It was realizing above 100. It's kind of drifted to about 95. But the vol's got destroyed, right? The vol was up above 120 in the 1 week stuff, got back down to close to 90 into the weekend, has settled in just around just under 100 now. So pretty big swings in vol. Obviously, disproportionate amount of selling goes on in DOVs in Ethereum. If it's coming from a high base vol as well, it's got more room to come down, right? So that's kind of what happened there. But we have got slight, implied vol versus realized vol premiums in both of the assets here. It's a bit tighter in Ethereum right now, which is interesting. People paying a little bit more premium for Bitcoin, but that's because the absolute level of vol in Bitcoin is 75, whereas you're still paying 100 vol for Ethereum, basically. So people just look at the absolute level and thinking there's more value there, basically, which isn't necessarily always the case, right? As we've been talking about in recent weeks. If we then move over to what term structures are looking like, what they've been doing. So obviously we were pretty inverted going into the FOMC. Shouldn't be a surprise there. That's the shadow curve, which is the yellow, completely collapsed. And now we're looking at pretty much flat curves in both assets, Bitcoin and Ethereum. Yeah. So pretty stable run. Pretty standard run of the mill price action post an event. That front end gets slammed as the event passes. You can see sort of, if we look at the evolution of what was going on there, you had the pink line, which is the weeklies trading at that premium, but the rest of the curve was pretty flat, right? So all the other maturities on Bitcoin were kind of the same vol. And then you had the weeklies come down to everything kind of stepped lower. The weeklies kind of overshot a little bit, and now they're drifting back up again, and I've got a little bit of a premium, little bit of an inversion come back on Bitcoin. And then same sort of story. If you look at what Ethereum vols, weeklies were well above, got slammed back down to be in line with the rest of the curve. And now that whole curve is just kind of coasting along pretty flat. So not really a lot to do or say to that, right? it's kind of fairly priced. Not an obvious trade right here, I would say, to be honest. I think crypto market's going to take their cue from stocks with what goes on with non-farms this week and what goes on with earnings, but not really an obvious play for me to do anything right now. If we then look at what skew's been doing. So skew's had a couple of attempts on those like breakout attempts to the upside. Skew's had a couple of attempts at going bid for calls. Right? So you can see that across both assets. Now the weekly calls have, gone back to zero. So neutral skew for calls and puts on the weekly for Bitcoin. That's about as good as it gets. The rest of the curve has stayed in kind of -5 to -8 territory. So puts have definitely held a premium for the rest of the curve, but the weeklies have gone to neutral, but then failed and they're back in line in Bitcoin. Whereas if you look at Ethereum, they've gone a bit higher, right? So the weekly's got to about 5 vols over briefly heading into the weekend. And even if we look at the blue line, like the 60-day stuff, actually, no, it's not the 60 days, that's the light blue. I think that's the longer date. The 6-month stuff actually got close to zero. But now you can see it's all faded again in the last 2 days, right? So as spot kind of gives up on the rallies and rejects that 1800 area and sells off about 100 or 200 points, the skew, the call skew just can't hold, right? And call sellers come in and put buyers come in and it fades again, right? Now, I would say some of that might be also, some of that demand for puts might also be the fact that people have allocated into Ethereum in terms of spot price, in terms of Delta One exposure, and then they're using risk reversals and they're using puts to hedge that exposure. So it's not always that bearish to see the put vol go bid and trade at a premium. Sometimes it's a sign that people have got long the actual underlying and then are buying puts to protect themselves, right? So I think we might be seeing some of that as well in the more longer term part of the curve, like the more medium term. But in the weeklies, for sure, it's just like driven by spot sentiment. It's very spot sensitive. And whenever spot rallies, the weekly calls will catch a bid. And whenever spot sells off, the weekly puts will catch a bid. And that seems to be how weekly skew behaves in crypto, just because of the nature of the speculation that goes in there and people using options to play those short-term moves, right? And using very short-dated options to do it. Because when the vol's so high, if you don't play very short-term options, then the premium that you're spending starts to get quite expensive. So the speculators just want to keep the premium down, keep it to weeklies, and just kind of play those short-term momentum moves and those breakouts, basically. All right, so that's kind of what I'm seeing in skew. If we then look at flows, so you can see here, both in Bitcoin, so I've got the gravity chart up alongside the block sniffer here. So you can see like massive pink domination, right? So it's all about the call options, right? The flow at the moment, right? Puts are just not really that relevant, right? All the flow, all the dominant flows are in calls, okay? What did we see in Bitcoin? We saw short-dated calls being bought. There was some selling into the week, into the Friday auctions, and then it all got bought back, basically, right? As the market started to squeeze. And so a lot of short-dated call buying, 5th of August, 22 to 25K strike, 26th of August, 25 to 27K strike, as we started to test that 24,000 area. Now, some of those calls were bought delta neutral with a hedge. So some vol players actually looking at that gamma thinking it's good value in the 70s. So some of that flow wasn't just outright bullish bets, basically. It was gamma players. Yeah, which is quite unusual to see because normally we just see gamma sellers, right? Because of the DOVs. Then long dated, we're also seeing March 23 buyers of outrights, 36 to 40K call buying. How do we know it's buying? How do we know it's outrights and not spreads? Because we see that over here in the gravity charts. And this particular gravity chart is a weighted Vega. So it's not looking at lots traded, it's looking at the amount of actual Vega on the trade. And converting it into a normalized metric to go across different expiries. So that's why, you've got weighted Vega here in the front end that looks similar to weighted Vega in the back end because it's converting it to a number that is like apples with apples, basically. But anyway, the point being that those upside calls are net outright buys there. We're seeing the outright buys with those big blobs there in August and then also in the weeklies, basically, right? So that's quite nice graphic there that shows us what's going on. If we then look at Ethereum flows, we're seeing a lot of puts on screen. And the reason we see that on screen is if we look here, the 5th of August, all those little red dots, those little round circles, that's the stuff that's not block trades, basically, right? So the non-block screen stuff was loads of clips of puts being sold, but relatively small size, okay? But you can see the dominant blobs that we're seeing are, again, some August call buying in the 1800 calls and the 2200 calls. So again, just a bullish bet to try and play that breakout. But then the massive flows that we have been seeing of late and continue to see are these Dec 22 and March 23 call spreads and call flies that are being bought in Zulu size, right? They're being bought in like hundreds of thousands of lots. And this is why, and this will lead me to the next slide, but this expression of spreads and flies, multi-leg trades, trading massive quantities of options on Ethereum has actually led to Ethereum open interest overtaking Bitcoin. So if we look here, this chart shows, like, going back to sort of 2012, the Bitcoin open interest, the Ethereum open interest, and this is in I think this is just for options. I hope it is, not just futures. But basically the idea being, I got this from the Genesis newsletter, but basically it shows you that Ethereum's overtaken now. Now that's a little bit more sort of sensational because than it should be, because of a lot of this being call flies and call spreads. So the notional numbers go up, right? But the actual amount of risk on a lot of those trades isn't monstrous, right? But it is what it is, right? So you can see there's a relatively big uptick in Ethereum options activity relative to Bitcoin. And we all know why, right? Because they've got a catalyst, right? And then just on the other side, you can see the Ethereum Bitcoin at the money vol spread is pretty pumped, right? So this shows you what it was a week ago with the front end 35 vols over. But you can see even the medium term has ratcheted up from like, 22, 23 to like nearly 30 vol. So that 50 to 60 day volatility is really where the bid is for Ethereum, and that spread's trading at 30 vols of implied premium to Bitcoin. Yeah. So and again, that is basically the merge. That is the risk premium attached to the merge. Whether or not it's going to increase and go even higher than 30, I don't know. 30 is a pretty big level for that premium to trade at. So I think it's starting to maybe reach a limit, which is why we're seeing a bit of a bid to Bitcoin volatility. But we'll watch this space and kind of let you know, right? But yeah, that is looking pretty pumped right now. And it wouldn't surprise me if it's setting up for a bit of a disappointment, given that it's so pumped and there's so much anticipation. It might just end up being a bit of a damp squib when vol gets nailed, right? Like this is, given the amount of anticipation, I mean, it might have some room to run. I think spot will certainly have some room to run before the event, but I'm not sure the vol spread's going to get much beyond 30 vols, right? But we'll see, right? It kind of really depends on what kind of gap we get, right? I mean, do we get 20% gap? If we get a 20% gap and Bitcoin does nothing, then maybe it's justified, right? So remains to be seen. Okay. Anyway, that's it for me this week on crypto. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.